Hello, everyone, and welcome to another Federal Updates podcast. Annie and I are here right in the middle of a crazy March tax season. Annie, how's things in Dallas?
Well, it's busy in Dallas. I'm sure it's busy everywhere, but it's going. That's what tax season's all about. So we'll see how many more new things can pop up between now and April 15th.
Yeah. And I think the last podcast we did, Annie had to issue a slight correction because things changed right afterwards. Our
So
update, it's
fast.
not a correction, an update. So, given the world we live in today where things seem to change hourly, this podcast is being recorded on March the 7th. And depending on when you listen to it, it could either be one of the best podcasts you've ever listened to or completely irrelevant the way things are going. But we're going to talk about what has happened since our last. And in some cases, we hope that at least we're going to start with BOI. This will be the last time we'll talk about BOI for a while.
I certainly hope so. It's about time we can bring some good news to everyone about BOI, right?
Right. So with that, some of you may have seen some of this, and this won't be new to you. We're going to try to give you a little different twist on everything. But Annie, let's start by saying what happened with BOI since, I think when we did the last podcast, we said you had to file. Then you had to record an update that said you didn't have to file anymore.
And there was this March 21st deadline hanging out there that may or may not have existed, but you're right. As of today, earlier, like about a week ago, the Treasury Department came out and announced that they will not enforce any of the penalties or fines associated with the Corporate Transparency Act. So that's the beneficial owner reporting requirement. Now, that doesn't necessarily mean it's not enforceable,
Right.
but more along the lines of the Treasury's planning on issuing proposed rulemaking that will sort of narrow the scope, focusing mainly on the foreign reporting companies rather than the U.S. reporting companies. And in all honesty, the timeline was horrible to begin with.
Right.
There's been a lot of back and forth court cases, news media reporting incorrectly information about what this was. But if there's one takeaway from today, as of right now, you do not have to file and you will not be assessed penalties or, you're not going to jail. You're not going to get thousands of dollars of penalties with respect to the Corporate Transparency Act.
And again, we haven't seen the final rulemaking that they're going to issue, but we're pretty certain, because they've said this, that it's going to narrow it down to, unless there's some foreign component of it, the penalties will not apply. Now, again, the law is still there. There's still the Corporate Transparency Act has not been repealed, so it's still on the books. And unless Congress acts to repeal it, I guess a court could say you have to enforce it. Right now, what's interesting is that, for up until, I guess, a few days ago when this ruling came out, all the action in the courts were people who opposed it.
Mm-hmm.
Trying to get it was unconstitutional or give us more time or whatever. Well, now that now that FinCEN has come out and said we're not going to enforce it, you're hearing for the first time from the people who are proponents of the Corporate Transparency Act saying this is going to harm the United States. We're sanctioning money laundering. We're doing all. So I guess they could go to court and try to
go the other way.
Their case. Yeah. But I don't see FinCEN pushing it. It would have to be the court. But I guess you can't say it's completely over unless and until Congress repeals
it altogether.
And then there are some bills out there to do that. Now, they haven't gotten a lot of traction, and this may make it harder to get a bill done because they don't probably see the distinction between not enforcing it and the bill still being
in existence.
And again, in 4 years from now, if we get a new administration and the bill is still on the books, it could come back. So it's not to say that all the reporting that has been done may not at some point be beneficial because you're ahead of the curve, because and I'll let you talk about this. We've been getting a lot of questions about, well, what about the people who've already done it?
Right.
Are they hurt? Are they harmed? Should they withdraw? What should we give them their money back? So talk a little bit about what we're telling our people because it stopped and started, and every time it came back, we did some, and then it shut down, and then more. So, what should we do, or how should we communicate with clients that have already complied now that it appears to be?
And I will start by saying, if you go to the FinCEN website, you can certainly file. Like, it is a voluntary filing. They're being accepted. It's not like it's been pulled from the website. I mean, it is still active. It is still there. So what we've been telling our clients is, if you've already filed, great, sit tight. If it gets repealed, we'll figure out what's going to happen with the information there. I don't think if you've already filed and there's one of those instances that would make you have to go update within 30 days, none of that is in play. But if you've already filed, you've already filed. If you're a tax preparer and you filed and you got paid, and I doubt any of your clients would be like, well, I paid you for something that we didn't have to do. Well, at the time that you did it, you did have to do it.
Right.
So, don't get caught up in that wheel of, well, should I give them back their money, or what should I do? I will say, if you're like midway, you've maybe collected some data, or you've started the process and you're waiting on something, I would say just wait, give back their information, unless they want you to continue on. Obviously, if the client wants you to continue on and file, you can certainly do that if that's what you want to do. But I wouldn't necessarily go out and start promoting this as a service that you provide, or continuing to collect information at this time. Now, if you have an engagement letter to perform the service, maybe consider disengaging. I don't know what everybody's practices are. If you've got something formal saying that you would complete this by a certain date, I would at least maybe disengage from that, or make that null and void, just for liability reasons. But yeah, I mean, it's hard to say. It could come back, like you said, it could come back tomorrow. I don't think it will. I don't see that necessarily, but it doesn't have to be, oh, I did all this work for nothing, because until it gets repealed, it's not for nothing. So that's basically what we're telling our offices. I am a huge proponent of sharing the communication to your clients, making them aware of what's going on, even if you don't go into great details of what was here and then it changed there, and then this court did that, and then now we've got this. Just a simple statement along the lines of, as of today, this is put on hold, and there's no enforcement of it. So at this point, just sit tight, which I guess is what we've been saying forever.
Or get BOI and get through the tax filing season, because there's just really no energy behind bringing it back right now from either the proponents of it, or I'm not aware of anybody that's taken it to court. And clearly what we've seen now is FinCEN saying they're not pushing it, which was, they were always pushing. Yeah, that's the biggest thing. So I think we're certainly safe for the, as far out as we can see. I just don't want to say never. But like you said, Annie, I think it almost, I would, if a client came to me and wanted their money back, I'd almost feel like that's a client I don't want anymore, because they don't appreciate the fact that, as you said, we did what the law required when the law required it. And it's not our fault. It's not the client's fault either, but we put the time in, we did the education, we did everything we were supposed to do. We can't control, God knows we can't control what goes on in Washington anymore. So
if we ever did, we can't anymore.
If we ever did, it's certainly impossible now. So I wouldn't feel the need. I mean, you can make your own decision on a case-by-case basis, but I would really say, if a client asked for that, unless they were kidding, I would really look at my relationship with that client, if that's how they
want to do business.
That we have such a transactional relationship that now that something got repealed. I mean, I guess, what if they repeal the income tax system, which some people say we can do? I'm not sure we can, but would they want all their money back for all the years they filed a tax return they didn't have to? I don't know.
But yeah.
I'm not for giving them any money back.
Yeah, I'm there with you. I'm not doing it either.
All right. Any last? Let's hope that this is the last time you will hear BOI from Annie and I for ever, maybe.
But that would be nice.
Because I don't know what the next thing would be, but we'll see. So
you never know, something. But as you're probably listening to this, we've got this looming March 14th government shutdown date, only days away. I personally have not seen a lot of progress, so to say, but I do agree with both Republicans and Democrats that are saying we are running out of time.
Yeah. And because that's what, next Friday, as we sit here today.
Yeah. I think it's
from today. Yeah.
So only days away to, avert the government shutdown. And from what I've seen, negotiations have not gone smoothly. And there's speculation that maybe some of the Democrats will withhold their votes, sort of protesting all the stuff that's going on with the spending cuts and at the IRS. So something big's going to have to change real quick.
Yeah, I think
to see something.
Couple of points. Number one, this is a different bucket of money and problem than the big reconciliation, which we'll talk about in a minute when it comes to tax reform. This is just keeping the government funded, which is scheduled to run out on the 14th of March, which just basically shuts the government down, so nothing gets done at that point. I did read an article today. Here's the dynamics of funding the government. It's conceivable that the Republicans could all band together and pass an extension of the debt ceiling and fund the government in the House, because they just need a simple majority.
Right.
Even if it passed the House, when it goes to the Senate, it's still going to take 60 votes. So it would have to be something that the Democrats at least provided 7 votes to do, because there's only 53 Republican senators. So it's a big hurdle, and unfortunately, it's going to be decided by how the two parties view who gets the political blame if the government shuts down. So, if the Democrats think it helps them, then they won't provide the 7 votes till they get a little sweat out of the Republicans. If the Democrats think it hurts them, then they'll join there. The one thing that we've been told, and I think we can count on, for those of you that are listening to this, probably have something to do with the income tax system. Government shutdowns don't close everything.
Yeah, you still have to file your tax return.
You've got to file your taxes.
Good point.
And the IRS is usually considered, the critical functions don't shut down. And during the filing season, the IRS is considered, it's funny, they're critical until they're not.
Right.
But they're considered critical. So they will, at a minimum, in the past, have kept everything related to the filing season going. Now, some things may shut down at the IRS. They may keep the whole agency open. We don't know. But it's not going to directly impact the filing season if we have the government shutdown. You'll still be able to e-file. Returns will still get processed. Refunds will still be sent out. Maybe some delay, but they don't shut down. They have to go to work and process tax returns during the filing season. So it's something to watch. We got a week. It's really about politics. Eventually, they're going to have to fund the government to keep it open. But we got to play the game.
All right. What's up next?
All right. As I mentioned, this is different than what this whole reconciliation and the tax reform piece. This is funding the government this is kind of like paying the bills. The reconciliation is next year's budget.
Right. Good point. I like how you say it like that. That makes sense.
So, and it's in the reconciliation where tax reform that we're all hearing about. What I thought I would do to start with, Annie, and if you don't mind, it may take me a minute, but I want to walk through all the steps of reconciliation. So as you hear things, you don't get confused about what really happens, because there's really kind of a six-step process that you walk through in reconciliation to accomplish tax reform the way they're doing it. Starting off with understanding that reconciliation is there just to be able to get around the Senate 60-vote filibuster. That's all this is about. Because
and it's not new.
This is not new. It's been used before. Both parties have used it, so it's not new. So what we're trying to do here is, if I'm the party in power and I don't have 60 votes in the Senate, I want to get my agenda through, and I don't want the filibuster to stop it. So it starts like this. Both the House and the Senate come up with what they call their their reconciliation package, which is kind of this broad outline of how much money we plan to spend, what we plan to cut. It kind of puts a guardrail around dollars. It sets some dollar limits. The House does it and the Senate does it. And in fact, both have done the first step. They have both put out their broad plan for spending. Okay. Unfortunately, we've talked about the one bill versus two bills. The House package is one big bill. It's everything.
One beautiful big bill.
One big, beautiful bill.
Yeah, there you go.
The Senate is the first of two bills. So step one is completed, but there's a
gap,
conflict between the two. So step two is they have to agree on what direction they're going. Are we going to go two or one? So that's the second step. So all we've accomplished today is the first step. That's where we are. So when you hear a lot of talk about tax reform and topics, we ain't got to that yet. We're still right now, we have a reconciliation bill in the House and a reconciliation bill in the Senate. The next step is they have to agree, are we going with one or two?
Do they have a deadline? How long can they stay like this?
Well, they can't do any. They have set some artificial deadlines. They want to get the tax stuff done by Memorial Day. Well,
I saw that.
As we go through these steps, they better be moving quickly if they're going to do that, because we haven't even, again, we've just accomplished one of 6 steps, which is we both passed a reconciliation, but they're different. So now the two houses have to come together to decide, are we doing one or are we doing two? That's step 2. We haven't accomplished that yet.
Right.
Once that's done, then the House goes over and does their thing, and the Senate goes over on their thing about how now to actually spend that money and what to do. So there can be a tax reform package in the House and a tax reform package in the Senate. There can be spending cuts in the House and spending cuts in the Senate. So they both go back to their committees now that we've agreed on how we're doing it, and then they all fill in the blanks. What does the tax reform look like? What are spending cuts? How many agencies are we going to close? Well, guess what? Those will be different too.
Of course.
So then we get to step 4. They both come up with their package and they both pass it.
Okay.
Well, guess what you got to do then? Now you got to get together. At least at that point, we'll have the parameters of what tax reform
There'll
will
be
look
a
like.
better understanding of what way we're going.
What
with
it
the
is.
avenue. Yeah.
Right.
I agree.
If something's in the House and in the Senate, then it's pretty much going to be in the final bill.
Right.
If we got something different, like let's say the House decides we can only afford to do no tax on tips, and the Senate wants to do no tax on tips, no tax in overtime, no tax on Social Security. Well, it pretty means tips will make it, and we don't know about the other.
But the other two, right?
So you'll have a pretty good indication of where tax reform is going. But then the 5th step is they have to then merge those two plans together into a single plan that then goes back to both the House and the Senate, and they have to pass that plan.
So it has to go back to the voting at the very last step from the last stage of all the modifications and the negotiations. Well, that seems like a lot of work before Memorial Day. Now I'm not so positive.
And there is a step after that I don't think is relevant here. If we had split government, like if we had a Democrat in the White House and a Republican House and Senate, the president ultimately has to sign off on it. So in this case, I don't think they're afraid that Trump would veto this bill. But conceivably, he could veto the bill, and then it goes back to both houses, and the veto has to be overridden. So that last piece, I think, is pretty much an assumption that that's not going to be an issue. So I hope what you hear in this is we've got a lot of work to still do. Yeah, the first step was accomplished. So we're moving down the path, but there's a lot of backdoor discussions and a lot of things that have to be talked about and agreed on before we're even close to having a tax reform bill. Each step will give us a little more indication of what that bill might be. But
all right,
you really got to get to those final 2 steps before you're going to know for sure. The Republicans in the House have set as I mentioned, a Memorial Day weekend deadline. That's pretty aggressive with all of this, because it's not like these sides get along that well.
Well, and then it's what you see in the media and what's really happening behind closed doors. I mean, it's hard to know where's progress even being made. Um, and I feel like maybe we take 2 steps forward and then a step back, and so I don't know. I'm with you. I think that's going to be a huge hurdle.
Yeah,
But
it's actually harder when you have to fill in the details. Like so far, they just kind of agreed on this big overall overarching amount of money. But even in the Republican Party, you've got people who want to cut more spending than others. You've got people who want to be more aggressive on tax benefits and things like that. Well, if one or two Republicans in the House buck whatever the majority wants, it never makes it out of the House,
yeah,
because I don't see many Democrats supporting whatever happens here. So, I mean, that's why the two bills. First of all, I read an article today. The Senate wants to do the easy stuff first. They want the energy and immigration in their one
right,
bill,
right,
and then do
and
a
then
second
save
bill.
the tax reform for
Yeah,
the
for the
second.
second bill. Well, the House thinks they can only get one bite at the apple. We're going to have to ram this through as it is. We can't try to do it twice. I read an article today, and again, you got to be careful what you read and believe. That the two bill approach has never worked. There's never been a two bill thing like this happen. I didn't go back and look at it. I didn't research it, but that's what I was told. And that's the House saying this has never worked and it's not going to work here.
So we're not even going to attempt.
So we got to convince the Senate to go with one big bill. And the one big bill makes it harder to get Democrats when you got to get 60 votes, because there's going to be something in the big bill that they don't like. And so we don't know where the horse trading is going to end and when we're going to get something. But each of these steps will tell us a little bit more about what tax reform is going to look like. And because clients are going to want to know, you're going to want to know, does 199A stay?
Yeah,
Does
well, the Tax
SALT
Cuts and
change?
Jobs Act. I mean, although Trump is saying that he's hinting, maybe I should say, about putting a priority on a lot of the revisions, fully restoring many of the provisions in the Tax Cuts and Jobs Act, the SALT deduction, the bonus depreciation, 199A. I mean, those are all very topics that are reappearing very frequently in discussions.
Yeah.
So
And some have bipartisan support, but again, they're all in one package. It's not like you can say, well, I'll vote for that, but I won't vote for that. I mean, it's going to be an all or nothing approach. So, would I like to believe we could get this done by Memorial Day? Because what we all want is we want some certainty. So, as we're advising clients
yeah,
about
the
making
sooner the better.
decisions, the sooner we know what it is, the more we can help them in making plans for the
Exactly.
future and things like that. So, we all would like to know what we like as much certainty as we can have, and we're not. I'm afraid we may not get it because, again, and we're going to talk a little bit more about the whole Washington stuff that's going on. It's just like we're not in the same planet here. So how do we negotiate some really tough things unless I don't know. I don't know what changes it. Like I said, I mean, if you watch the State of the Union, I mean, we had very few things that everybody in the audience stood up and clapped for.
Yes, yes.
I mean,
And did you know that it was one of the longest speeches? It
yeah,
was 99 minutes. I guess I guess I thought I guess I didn't realize so many were short and sweet.
yeah. I think
This one was not.
he and Clinton are battling for the record. I think
Okay, okay.
the
Yeah.
two of them, and
Yes.
that doesn't make sense. Those are the two. But so I mean, you just didn't see a lot of what I would call common ground in that State of the Union, and yet those are the people that are going to have to come together to get us a tax bill. And if we do nothing, the Tax Cut and Jobs Act, we've said this, you've heard Janny and I say this, it just expires.
Yeah.
And we go back to what the law was before that, though some of the corporate and business stuff was permanent.
Some of that was permanent on the first round. Yeah. So, but I mean, the conversations about the tariffs is also, I mean, it's huge, and it was a large part of his speech.
Right.
So I don't know what your take on sort of the idea of, I don't know.
I'm not smart enough to understand tariffs. I mean, conceptually, yes, I know what they are. There seems to be a battle as to whether they're inflationary or not, and who eats the cost of the tariff. Does the consumer eat it? Does the company paying it eat it? Does the government eat it? Somebody's paying it.
Yeah.
But what I have found really interesting, and I think our listeners realize how crazy this sounds, there is talk that, and I think the Secretary of Commerce has said this, and President Trump may have said it, that ultimately they believe that we can have a system where we abolish the IRS and we create not the Internal Revenue Service, but the External Revenue Service. And the External Revenue Service collects all the tariff money, and they can collect enough in tariffs to eliminate the IRS because they can eliminate the income tax, and we can fund our government 100% through tariffs.
It's a big leap.
Yeah, I mean,
it's in my opinion.
Yeah, I've never been in a world where that was doable. I'm not going to say it's impossible, but you are hearing that as some of the goals of the administration is to eventually get to the point that we can abolish the IRS, abolish the income tax system, fund our government with tariffs, and we create I guess you're auditing countries instead of people at that point if they don't pay their tariffs.
Right. So, I mean, the focus is on China and Russia right now, from what I could tell.
I'm not confident that's going to be something that we're going to have to deal with, but that is being discussed, and it is in the discussion that you hear, so don't be shocked when you hear it. But I think we're more likely going to continue to have an Internal Revenue Service, and we're going to continue to have a tax system that we're going to have to help people comply with. I just can't imagine a day in my life
the entire yes.
that I will never have to pay. And then you still got, what do you do about the states? I mean, the states can't charge tariffs, so you're still going to have a state income tax system. I mean, I don't know. I mean, I'm going to try to stay out of this. I'm not trying to be political, but I think while you may hear it discussed, I think it's going to be very, very hard to pull off. And that's my opinion. So that's all I'm saying.
Well, and here we are saying that's going to be really hard to do, but guess what? They're about to fire 50% of the IRS workforce.
Yeah. So we read.
So we read, so there's currently 90,000-ish employees, and to cut 50%, you're talking about 45,000 people. And I think they've already sent 7,000.
7,000 got fired about 2 weeks ago because I was in Washington at the IRS the day that happened.
That's right. That was a bad day for you. I forget about that.
Yeah. Well, it wasn't a bad day for me. It was a bad day for everybody at the IRS.
Yeah. Well, bad day for you to be there.
Bad day to be at the IRS, I guess. Yeah.
And then like 112 or 110 plus IRS assistance centers are going to close. So, those are where maybe your elderly people go to get help. But I mean, that's like direct numbers, but I cannot imagine how the wait times at the service centers or on the calls are going to be, or processing delays. I mean, we're into tax season now, and right. We know that there are fewer returns being filed, even though the refunds are a little bit bigger. But that could also be, we have so many delays related to natural disasters. So I mean, like, you can't say that's because of it's not a direct correlation. There's a lot of factors that come into play of why people might not have filed their return as soon as they had in previous years. But, all the correspondence letters and the processing of amended returns, I mean, there's a lot of things that are very, very manually handled. And when you cut the workforce in half, I don't know how do you decide what takes priority? Who works on what? Like, I don't know. I'm concerned. I'm concerned.
Well, I think we all are. I think, again, some of this, there's been, because in the media in the last, and this literally is every day something changes.
Yes.
But what Annie's talking about is things that have been in the media, that there was unnamed sources, shall we say, that said that the workforce is going to be cut by 50%. You mentioned the closing of those centers.
Yeah.
What has been interesting in the last 24 hours is, number one, if you listened to President Trump yesterday, he indicated that these employee cuts would now be done by the departments as opposed to Doge, I guess. So walking back a little bit of the aggressiveness, and there was a hearing yesterday where they were trying to confirm like an assistant secretary of Treasury for something. And when he was asked about this 50% cut, he said, well, I haven't heard anything about that. I don't know if that's true. So you're beginning to see a little bit of it walked back, because I think people realize that unless we go to this external revenue, all tariffs, the government gets funded by what the IRS collects.
Right.
And I think what you're beginning to hear now is, well, maybe we can get to 50%, but it's going to take a while, and it's going to mean we're going to have to put more technology. I don't think anybody really believes that we can walk in and slash the IRS by 50% April 16th and have a functioning IRS. At least that's what we're beginning to hear.
Well, and then we're talking about tax reform packages. And I mean, unless we're going to a very simple system, which I don't foresee.
No.
Tax reform, I mean, that requires people to develop new forms, to educate the public, and process returns and understand what's happening so that the correspondence goes well. I mean, that takes people. I will say the IRS has made great, fantastic strides on technology, and we'll talk about that in a second. And there are a lot of things that can be done, processes that can be done online now versus, going into a call center or getting on the phone to speak with an IRS agent. But if you're going to develop this new tax reform package, I mean, that takes manpower to get it out there. And if you're cutting staff, it just doesn't make sense to me.
Well, nothing that we're doing is going to cut down the number of tax returns that have to be processed every year. In fact, they go up every year. So none of this reform is going to eliminate filing. So you still got to process the same number of returns. You're still going to have people who don't pay. You're still going to have people who need help. You're still going to have all these things. Now, having said all that, I'm not, and I don't think anybody believes that there aren't room for savings at the IRS. I think we all know that probably every government agency, whether it's state, local, or federal, could be run better and be run with less cost. And I know we support that. Everybody supports that. But let's just do it in a logical, well thought out manner, so that the workload of things, because again, to your point, I mean, you're going to wait longer for refunds. God forbid you need to talk to a person about a problem, or you send in correspondence. I mean, again, the amount of work is not being cut back. We're only cutting back on the amount of people there to do the work. So it's going to have to stretch out. So I'm hoping, I feel a little better today than I did 2 days ago, that we're beginning to hear like, well, wait a minute, maybe we can't do this as fast and as dramatic and drastic as we thought, because again, we're about to conceivably pass a major piece of tax reform that may take new forms, may take new instructions, may take new guidance. And I'm also, and I'm going to speak from a personal standpoint for Annie and I and our firm and our industry. What I'm really concerned about is that we cut out some of the outreach and some of the programs that practitioners need.
Absolutely. I was thinking about that just the other day. Like all the forums, like where are people going to go if to get educated? The webinars that they put on, the collections and enforcements groups, the IRS advisory groups, and the panels. Yeah. I mean, they play a vital role in maintaining the stability. And I'm concerned. I mean, I'm not saying that those are being cut. I'm just,
no, we don't know.
I mean, I don't know what something's going to be cut, and I don't know how they decide what goes and what stays, but I can't imagine that some of these outreach programs would not be impacted.
Because one of the concerns I have, and having had the opportunity to go to some of these forums and go to some of these meetings, is the danger is if you I don't know what they cost. So they may not even be on the chopping block. They may be, hell, we may get more money. I don't know. But when you start chopping, you feel like everything gets chopped. It's the stakeholders from the outside that bring the real world perspective into the IRS, because we've all seen it where things that make perfect sense sitting in a building in Washington, D.C. aren't going to work. Yeah, the most classic example I can think of, because I had to deal with it yesterday, was when they changed the W-4. We had 100 years, 75 years of people who said, am I married? Am I single? How many people in my house? And you filled out a W-4 like S1, M2. And all of a sudden, we had this massive new thing that requires you to know how to fill out, income sources of income. Oh, it's work. If you could do that, you don't need a tax preparer. You can do your own taxes. It's easier than filling out a W-4. And we kept telling them, this ain't gonna work. You can't change people's habits just because you want them to be more accurate. Because
we had it was really it still is. We get questions on that all the time.
Yeah,
all the time.
And I had a call yesterday from somebody that said I was under withheld. And I said, well, how'd you fill out the W-4? And they filled out the top, signed the bottom, and in the middle wrote 15%.
Okay, well.
So okay, well, that's not quite how the form works. But there's an example of how if you don't listen to the outside, you spend a lot of time and money to create something that in a theoretical world makes sense, that if we get all these questions, then they'll get the right amount of tax withheld and they won't get these big refunds that they have to wait for. They won't owe these big bills. But you can't change the way people think after 50 years of doing one thing and then hand them she said she got a booklet. Got a form of booklet, and I'm thinking, come on. So that's a long way of saying the outside information that stakeholders like you, me, our listeners, our other offices bring to this discussion has got to stay available, because otherwise we're just going to get things that sound like they make sense until you actually try to do them.
I'm not going to say it because we haven't said it yet, but another example would be the ERC.
Yeah.
Right.
Yeah.
Looked great on paper. Great idea. And that blew up. So
yeah. See, we couldn't make it without an ERC coming up.
I know. I was trying not to say it.
But that's why when we start cutting budgets and people, there needs to be thought put into it, not
or
just
departments or
departments or whatever. Because I really think, our practitioner hotline, how well is it going to work for us? Things like that. So it's not just people, the IRS is such an easy target. Look, they're the bad guy in everybody's mind. We all think about the guy knocking on your door, taking your money or auditing you and all that sort of stuff. But they are who collects our revenue, and they're not perfect. And I'm not trying to say they are, but God knows what we'd do without them. And if we don't have enforcement, I've always said this is my slogan, because I think if you cut back enforcement enough, I want you to think about it. What's the only thing that keeps you from speeding on the highways?
Getting a ticket.
If you knew the state patrol was never going to be on the interstate, how fast would you drive?
Right.
And if we know we're almost there, but we're never going to get audited, how much would you cheat? So we got to have enough support, enough enforcement to make our voluntary tax system work. And so if we're going to cut money, let's do it smart. All right. I'm going to shut up from rambling on. What else?
You make a really good point, and there's no right or wrong, and nobody's going to get it perfectly right. But we just have to remain hopeful that the decisions that are being made with the taxpayers in mind, the tax practitioners in mind, the agency in mind, and we'll see where we land, I guess.
Here we go. I would hope that we would even have some input maybe on where things could be cut, what services could be, I don't call them outsourced, but left to the private sector and things like that. We'll see.
Yeah.
There are some other things, Annie, talk about that the IRS is doing during this tax season that are potentially helpful.
Exactly. One, for example, I saw just about a week ago an announcement that now your W-2s and your 1095As, those are those health insurance marketplace statements. That's what a 1095A is. Those forms are now available in the online portal. So if you go into your online individual account, you can see those forms. And to get an account, it's free. You go through a authentication type thing, but it's fairly simple to do. And we do encourage you to encourage your clients to set up individual online accounts. And this is the best news. Let's hope the goal of having your 2024 transcript in your portal, in your online account, is March 31st. So that means that you could technically pull a transcript of your 2024 tax information before you even file the 2024 return. Think of all the mismatching and, oh, I forgot, or I didn't get this, I didn't know where it went. I mean, it would be really nice to be able to see what the IRS has on file and what you have, here to do the return. And just the avoiding of minor mismatched statements or forgetting something would be significantly reduced, in my opinion. And I think, I don't know if they'll make the March 31st goal this year, but I think that's a fantastic thing to strive for.
Yeah,
I think it's
and they seem
beneficial all
fairly
around.
confident they can. I mean, it's not March 31st yet, so we
Right.
don't know. But yeah, that would be a game changer to be able to look at what. Now, remember, it's only going to be what the IRS has. If someone was late getting information to the
Oh, that's
IRS,
true. If
it
your
may not
W-2
be
didn't
on the
make it.
transcript. So, I mean,
Yeah.
but it's going to be everything that they have, as I understand it. Every bit of information the IRS has for tax year 2024 will be on that transcript available March 31st, with one exception that I know people have been asking for years, and I'm not sure why it's not there. But the state information on a W-2 is not in the transcript. So you can't look on the transcript and see how much state tax was on that W-2 or what the wages were if they were different. I'm not sure why they can't do that, because they get but they don't. So you could pretty much do the federal return off the transcript, but you wouldn't know the state withholding. And if there was any difference in the wages, you wouldn't know that. But it's still a far leap from where we
Yes,
were.
and maybe they'll get the state stuff in at some point. Maybe
Yeah.
that's on the
I'm sure I've
horizon.
heard why you couldn't do it, but I don't remember, because I don't get it. But it's not there, so don't look for the
for
state
it.
information, because it's not. But that, again, that's going to give you 2 weeks to either validate returns you're still preparing, or look back if you had a concern about one you've already filed and get an amendment or a superseding return done before the 15th if there's a big omission there or something there. Let's hope, none of this craziness that's going on with government shutdowns and funding and employee cuts delays that, but that's the plan right now.
Yeah, that would be a really nice feature for tax practitioners and taxpayers to be able to see that.
Yeah.
So we'll see.
And the one thing that's apparent, online accounts, are going to be huge for us. The business accounts are getting better. The individual accounts are there. I mean, we're just kind of being short-sighted if we don't encourage our taxpayers to have online accounts and our businesses to have business accounts and us to have practitioner accounts. This whole idea of authorization and power of attorneys, again, all that works better if we're dealing with online accounts and faxes. And, IRS, I guess, is one of the few places you still fax stuff to.
You do, and mail in.
You got to find the fax machine first, I guess.
Yeah, I guess so. That's true.
So,
well, I know we're running short on time, but there are a couple of IRS announcements, so to say. They put out a list of some really just common basic mistakes that people make when they're doing their tax returns. And this is more on the, when you're preparing your own tax return, just making sure your Social Security number is exactly shown as the name on the Social Security card. So, if your Social Security card says, John S. Martin, then make sure you got that S in there, things like that. Filing status tends to be confusing from time to time with, especially if you become widowed or you're maybe head of household, but the next year you're single or you get married or you get divorced or something like that, just keep in mind that you are what you are at the end of the year. So if you get married on December 31st, you are considered married for tax purposes for the entire year. So I know that can also sometimes be confusing. And then, of course, you've got, people who, math mistakes. I mean, just math, even though most of it's done online and the calculations are done, but, figuring your deductions and your credits, making sure you put in the right bank account information. We have had times where people have put in the wrong banking account number and they're like, where's my refund? It's just not hitting the bank. And it's because there was a typo. And especially, I know most of us gather, e-signatures now to submit the electronic files, but both the taxpayer and the spouse, if you're filing a joint return, both need to sign and date. And sometimes I feel like, one will just scribble on there and send it off. And so, it does require both taxpayer and spouse forms to be signed.
Yeah. And this sounds stupid, but I can't tell you how many times I've been asked this. The fact that if you're single and own a house, you're not head of household.
That is true, but I can see how someone might question that, but no, that is not what the definition of head of household is.
So if you go to a preparer who asks you if you own a house and files you as head of household, you probably need to find
preparer.
You need to find a new preparer. One last thing before we wrap up, something else that went on this week that impacts all of us is, and I think we've talked about this. If not, there has been some proposed new regulations to Circular 230, which is kind of our guideline of how we operate. What we can do, what we can't do, best practices, things such as that. This week there was anytime you issue new guidance like that, there's a public hearing where you can come and either make verbal recommendations or you can submit written recommendations. And we did submit and make comments on one part of it. That hearing was being held this week, and from that hearing, we will get the final regulations. We're going to do a podcast sometime shortly.
With next few weeks, probably.
Yeah, who attended that hearing, and we're going to talk about what the proposed changes are and what they may mean to you, how the hearing went. We won't have final guidance then because it may take another months for them to take all the feedback they got at this hearing and
incorporate it. Yeah.
And incorporate it and decide what they're going to change. And they'll come out and say, we heard this, we agreed with this, we didn't agree with that. So here's what the ruling stays or what we change. So, but we thought it would be good to bring somebody on, and we'll do that, I think on our next podcast to talk about the broad. If you don't know what we're talking about, we'll bring you up to speed on what those proposed regs might mean to you in your practice and how you have to do things. There's some pretty interesting requirements in there and things that you'll have to do. And then,
well, it's been so outdated. I mean, it hasn't, it needed some modern aspects to it. So
it's got to relate to the way we operate today and the realities of where we are. And then our guest did attend the hearing so we can get a sense of how that went and what topics seemed to draw the most attention, which are the ones then it would indicate might have the most likelihood to be different than the proposed. And I would suggest, if you don't know what we're talking about, go look at the proposed regulations and look at how your business is being run compared to what Circular 230 tells you, it should run. A big one is it discusses contingent fees, which was a big deal with ERC.
Very much.
So there's a whole different discussion of contingent fees there. It even addresses succession planning and planning for disasters and health emergencies in a firm.
Technology, they put a lot of stuff about safeties of technology and, ways to avoid, cybersecurity and all that kind of stuff. So
we'll do that. It's really a bigger and deeper topic than you think, because if you think about it in the world that we're in, where we can't regulate return preparers. So what is a preparer and what can the IRS control and how do you hold there's a lot of really interesting dynamics that it's deeper and harder it takes a close reading. So we think that'll be an interesting podcast, and we look forward to doing that. Yeah. What else, Annie? Anything
That's all.
else?
No, that's all I got today. I'm just glad that I could finally come here and say something good about BOI.
Yeah.
And we only mentioned ERC for like 30 seconds. And we've got, some good things on the horizon, some good topics coming up, good speakers joining us. So I think I hope that you guys continue to watch and listen and share, invite your friends, and all of the above.
And one last thing, our 50th podcast will air on April the 20th, and we are lining up a special guest to make that one kind of a uniquely interesting one, because we want to thank all of you that have listened. And
absolutely,
I didn't know if we'd make it to 50, but well, we hadn't made it to 50 yet. We're close, but we haven't
we're
made
close.
it.
We're
close.
going to get there.
I think we're in the home stretch now, so we're going to have a special guest for our 50th podcast, and I hope this podcast is still relevant tomorrow. The way things are changing in Washington, if, as Annie did the last time, if something dramatic changes that makes something we said today relevant, we'll try to splice that in before it airs. It could happen afterwards. So as always, remember, we're recording this on March the 7th, and in today's world, March the 10th or 11th could be a different world.
Yes. All right, that's all I've got, Roger. Back to tax return preparation.
Yep. Annie, good luck. Let's get through the next, I guess month and a week.
That's it. Month and a week. We got it.
Month and a week. That sounds much better than April 15th.
It does, actually.
Thank you, Annie. Thank you, as always.
You're welcome.
Thanks, everybody, for listening. We hope you find this enjoyable, and we'll come back for our next podcast and maybe bring a friend with you. So good luck the next month and a week, and we'll be back soon with another Federal Update podcast. Thank you.